If MrBeast can convert only 4% of his YouTube subscribers into customers of Step Financial, the company he just bought, it will make the organization one of the largest banking institutions in the United States. On the show today, I've got Elizabeth Gujral from Cornerstone Advisors, who is a lead researcher there, and she has a lot of really interesting thoughts on what this means for the industry and what community institutions can do about it. Here's the interview. Well, Elizabeth, thanks so much for coming on the show. It's so nice to have somebody from Cornerstone on the show, and so nice to interact with you guys, not through an RFP or presenting like I did so many times in my former life.
Yeah. Well, I'm excited to be here. This is going to be a really fun topic because it's so important right now. I mean, I don't know if you just saw it too, because I know that, we're going to be talking about MrBeast and influencer marketing and all that, but if you saw the news the other day about Cash App now is also going to be targeting like 6 to 12-year-olds. And so people are really starting to figure out, how do we target this next generation and the younger folks for engagement?
Wow. Talk about a race to the bottom of age.
I know. I was looking it up, and I was like, how are they going to be supporting 6-year-olds? And, I don't think that, Cash App suddenly cares about the financial well-being of a 10-year-old, but I think it's a really great engagement strategy of, they won't have access to the app, but their parents will. And then they can run almost like a green light or any of those other fintechs, or, to do youth banking. So it's a way to, one, make the relationships with the parents a lot stronger or establish new ones. And then second, hey, my first debit card, I had it through college, and my parents opened up that account for me. So creating those sticky relationships very early on. So we'll see how that works out.
That's smart. Well, they're definitely skating to where the puck is going. That's really young, but I'm sure that a slide deck and an analyst somewhere told them that that was the right play.
Probably.
So I wanted to talk with you about MrBeast. This move with acquiring Step is obviously the 800-pound gorilla in the room. Wait, the elephant in the room? There we go.
Really.
As it relates to, non-traditional players coming in and having a potentially really outsized impact on the industry. Is this like the top of the roller coaster moment for influencers coming into fintech? What's your read on the landscape?
I think it is. And I think, I'm going to say the 8,000-pound elephant because it's, heavier than a gorilla. Only because, MrBeast has what, 400 million subscribers. It's bigger than the entire US population. They target what, like 12 to 24-year-olds. So like that younger Gen Z, early Gen Alpha, like older Gen Alpha. And whether you like MrBeast or not as a person, it doesn't really matter because Beast Industries, his company, is just a beast at marketing. And I think, this is really getting to the top of the roller coaster, and we don't know what that roller coaster is fully going to look like, because it is the first time that this creator influencer that has so much weight in people's lives, because people spend their lives on TikTok and online and on YouTube, they're entering financial services, and that's going to carry a ton of weight when we think about how do people hear about fintechs and their banking services. And if all of a sudden you have an influencer, promoting a product through Step, that's going to, I only expect Step's user base to just boom.
Yeah. I mean, if he even converts a tiny portion of his subscribers and followers into customers, he becomes a huge regional player kind of like overnight or whenever that occurs.
The question becomes, because it's still like that banking as a service relationship, is, all right, so we already know about, the fintech plus bank relationship, but now we're adding another layer of influencers. So to me, the big concern going forward is who owns the outcome, whether that's, if it's good, it's going to be Beast Industries. They own it. Step, yay. But if something's bad, who owns the bad outcome? Is it when kids start losing money and they don't fully understand the weight of their decisions when they're signing up for these fintechs or like Step? Is it going to be MrBeast? Is he going to take a brand hit? Is it going to be Step? Or is it going to be, the sponsor bank at the end?
Yeah. Who's left holding the bag, I guess, is
Yep.
what you're saying.
Yep.
Yeah. Well, there's some blood in the water, which Elizabeth Warren, I think, is sniffing out. She's had a lot to say about
She always does.
MrBeast. She always does.
She always has something to say.
Love her or hate her, man. She does her thing, very well. What's your take on her position as it relates to Step?
I think for me, when I was reading through her letter, I mean, the big question for me is this letter from Warren about really protecting teenagers and younger folks from the banking as a service, that fintech plus influencer kind of stack, or is it more about putting, just it's almost like a warning because we were at the top of that roller coaster and it's putting the whole creator economy on a notice. So if Mr. Beast does this, just so she's making it clear, hey, by the way, we're watching you. Or if anyone else wants to copy what Mr. Beast is doing, just so you know, we are watching. So that's what I think she's trying to do, is just put the whole this creator plus fintech economy on notice, and we're watching you. You can't do anything you want. This is a regulated zone. And I think a lot of fintechs have learned that over the years, that they can't just do anything they want when it comes to people's money, and they're especially working with banks because they have their own compliance rules. So I think it's gonna be very interesting to see how it all works out.
Very juicy future here indeed.
Yeah.
So I once heard Bill Gates say customers don't need banks, they need banking. And when I try to think about where this is headed and I try to take it, I guess, to like a logical conclusion 10 years down the road, 20 years down the road, whatever it may be, do you think that this moves us in a direction of commoditizing banks and what they do even more so and really just making it rails? It's just rails behind the scenes, bank brands go away. And do you see kind of where I'm going with this?
I do, and I think you're right. I don't think it's starting anything. I think it's probably just more accelerating it, right? Because there's this whole embedded finance, model where financial products don't have to live within a bank or marketed by a bank. I mean, they're showing up as buy now, pay later at a checkout. Their insurance at a travel booking. It's your Home Depot credit card. I mean, man, I have a few friends I've actually asked. They have the Apple card, and they had no idea that it wasn't Apple issuing the card. They were like, Goldman Sachs, really? So I don't think consumers really care. It's not maybe they don't care, but they're uneducated about it in a nice way. Because I mean, you and I and everyone else probably listening to this is we're so embedded in this space that we understand it. And I think, getting back to Warren too, I think that's one of the reasons why it is good to bring this up and put this economy on notice, because we have to protect consumers that don't fully understand the intricacies of how this is all going to work.
Yeah. No, I think that really makes a lot of sense. What for those who don't know, which there's a few people out there who don't understand this, what's the role of a sponsor bank in the fintech model traditionally?
Traditionally, it's just been I'm going to say it very simply, to offer the products. If fintech wants to offer a debit card, they want to offer a checking account. Those checking accounts actually live on the ledger of the bank. So all they really do is, like, they're just these big marketing machines. But when you deposit money into what you think is your Chime account, that's actually going to be money living at the bank. And that can open up a whole, can of worms too when it comes to who owns money, where is it, how's the money stored in like FBO accounts or individual accounts, and it gets messy pretty quick.
Yeah, absolutely. So I guess the value proposition offered from a bank to a fintech is, hey, let us worry about all the not sexy stuff, and you get to do the marketing and the front end and the Mr. Beasts of the world.
Right. And the banks can make a few bucks from it too. When it's done properly. And if I mean they can take a cut of interchange fees, they can charge for, accounts, and they pass on some costs to the fintech. So it's not just banks offering their services for free. They do get a little bit of a slice of the pie.
Absolutely. Ain't nothing in this world for free.
No, not at all.
So, Elizabeth, I probably should have started with this, but tell us a little bit about your background and what you do at Cornerstone.
So I am a director in what we call our RAFA, or Research and Fintech Advisory team. And so I work with a guy a lot of people know. So his name's Shevlin. But we manage all of Cornerstone's commissioned research. So we'll work with fintechs and financial technology. And when I say fintechs, I mean more like financial technology companies that serve, banks and credit unions. And if there's a topic they're interested in exploring, or we want to explore on potentially like if you're going to have a growth strategy, what's the tech stack required? How do you compete against certain fintechs? How do what are the current operations of small and medium businesses, and how do you appropriately go after them? So we are in the business of continuously learning and keeping all of our clients educated as well.
Got it. And so I'll assume you have a hand in, issuing the kind of cornerstone state of the union, if you will, summaries and
Yeah.
and
Oh yeah.
communications, newsletters that are going out.
Oh yes, because we like to have an opinion on everything that we put into our newsletters or put out onto social media. So I am one of the people that they'll be like, "Hey, what do you think of this XYZ?" And then yeah,
That's awesome. I think that's something you and your team have done really well. Cornerstone, I've been in the industry now for 20 plus years, which is insane to say and and think back on, but you guys have always done love Cornerstone, hate Cornerstone.
who hates it?
I don't know of anybody who hates
What
you guys. The only I just have PTSD from the RFPs, when they
yeah.
landed on my desk.
Yeah,
Um,
the research group is it's a significant smaller part of the organization. We do a lot of selections, and as you know,
yeah.
we pretty strict RFP process for selections.
And where I was getting at with this, sorry, I didn't mean to take it in a negative direction. You guys are doing
Okay.
a great job. Obviously, you built a great brand. And really, the way that you've done this is by being very honest and very candid with your takes on things, publications, stuff that you guys put out there in the market. And Shevlin and, the other folks at Cornerstone have just done a really good job building a trustworthy brand. And I think that's great, and it's hard to do. It's
And
scary. It's kinda scary to do that.
but that's kind of like what makes Cornerstone Cornerstone. And we do that, and I think is especially more important now than ever. Is like we don't want to tell a fintech or a bank or a credit union something that they could just ask ChatGPT or Claude or Perplexity. We want to be able to tell them, what something people aren't thinking about when it comes to whatever the topic is. And I think selfishly, I think we've done that pretty well.
You guys have. You really have. So let's bring it back to, what this all means for banks, and I guess, also for credit unions. Credit unions can play, in this space as well. How should they be thinking about partnerships? Because, celebrity endorsements, partnerships have been around forever. Even like with Step, Will Smith was an investor.
He was.
Serena Williams has invested in fintech funds. The Jake Pauls of the world have, but this one feels really different. I guess how should banks be thinking about, and I guess financial institutions be thinking about distribution and partnerships?
Yeah, I think it's, number one, it's should be changing if it already hasn't changed, how people are really starting to think about how they want to go after and market themselves to especially the younger generation. 'Cause especially it's an issue for credit unions, it's an issue for community banks, if we're on the consumer side of what, the median ages of their members and their customers. And they need to get a lot better at being where their future and current customers are and we all know like that's online. We've all been online for a while and it feels like these financial institutions are trying to play catch up to where should they be marketing. They're almost like taking this more old school mentality to marketing when they really need to be thinking more about the future and how do people hear about things. So an interesting tidbit, so we're currently doing some research right now on how financial institutions can compete against SoFi. And
Mm,
so we surveyed thousands of SoFi members, and an interesting thing that came out of it was that the majority of members of SoFi heard about SoFi either from social media or their friends, which is not super surprising. But those friends have also then heard about it from social media. And actually the third one was the stadium rights, so they see it on sports. So
hmm
but, most financial institutions, unless you're like maybe Chase, can afford to put your name on an NFL stadium. But that friend piece to me is really, really important because if the source of that is also social media, that tells you that number one, trust is super duper important of like we're hearing it from a friend and they're hearing it from social media and they probably heard about it from an influencer, a Will Smith or someone like that. And these are figures, when you think about the influencer economy, like they don't the reason why they're so successful, they can sell products through their TikTok shop and all that, is because people trust them. People have, certain levels of trust that when they start engaging with these influencers. And when we think about MrBeast too, he has millions of people that he knows. And, there's been a lot of research in the past about people tend to view influencers, like people tend to have a closer feeling that they're closer to the influencers than the influencers are to them. So they establish these personal relationships that are very one-sided. So
Right.
when we think about how do other financial institutions, banks, and credit unions, think about this influencer economy, obviously they can't afford a Will Smith, they can't afford a Kim Kardashian or a Mr. Beast. But what they can do is think about their own markets, their own communities, and who are some of the maybe like micro influencers in your market? What organizations are big and visible? What are the centers of trust that your members and credit and customers care about? And then looking at partnerships through them, because it's almost like the influencer trust funnel. I think is going to become more and more important as we see that's where the uptake of financial services is coming from.
Very well said. I think that is bang on the money. Where should institutions start? Like if they say, okay, this is a wake up call for us. How should they start putting together a playbook? Like we don't need details, but like what would the playbook look like in terms of putting their brand where their customers are spending time online? Is it like is it on Twitch? Is it going after Reddit subreddits? Like how should people approach this?
So when we've done research in the past about how we're specifically online, people are finding financial services. It tends to yes be TikTok, it's Instagram, and a big one is actually YouTube. So, and not the long
Okay.
form stories, but like short form, because that's where a lot of people's attention is. Because we don't, if you want to start getting into playing in the social media space, we've seen this at Cornerstone too, that our most engaged content is the short form content because,
Right.
and it's not just the younger generation that has shorter attention spans now.
We all do.
It's
Oh,
we
no.
all do. It's everything. So you wanna keep your social media engagement. I mean, if you're putting out clips, like, keep them short, keep them snazzy, keep them engaging, but don't go over, like, 10 seconds.
Okay, fair enough. And I've noticed with our own content that, I mean, our short form stuff is consumed at hundreds of percent
Mhm.
more than long form content.
Yeah. Ours too.
So, yeah, no, that's an interesting just dynamic here. Do you guys do commission on behalf of institutions who are saying, okay, we're happy with the performance of the institution, but we want to grow the institution. Where does like the digital advertising, the marketing, the storytelling fit into the growth levers for these institutions?
So we do a full assessment on their current marketing. So where are they playing? What kind of ROI are they getting as well? And then it's also important to evaluate your technology stack to manage all of these things because you can have the best TikTok videos in the world, but if you don't have the technology and the processes to capture people when they finally come to your website or click on that link, I mean, that's where a lot of financial institutions will fail. They will lose people when they get to the website or when they realize that, what do you mean it's going to be a whole 24 hours for my account to be approved? That's a manual process. I mean, I opened up a SoFi account to make a point to a client and I did it on a call in 3 minutes. Like, I mean, I
Oh
know.
my gosh.
I would think it was technically 3 minutes, 21 seconds. But I did it to make a point of
Wow.
you can have the best social media you want, but unless you have the technology and the processes to back it up, then it's just lipstick on a pig. It
Well
is.
said. Well said. I tried to open up a business account with a local institution here in Oregon where I live, and I had to actually schedule an appointment from a drop down that had all their branches
Yeah,
locate
I
like
don't
with their
wanna
street address.
I don't wanna
Yeah, it's impossible. I can't. I have 4 kids. I'm busy. I'm not going to do that.
no. So if you're gonna be online, you have to be online. You have to have the digital strategy. You have to leverage, banners in your digital banking. You have to have that social media strategy. You can't rely on physical mailers with no way to track the ROI on whether or not it's working. You have to be able to track your results.
Right. What's a piece of research that you've recently conducted or you're doing now that you think is really interesting or something that people should know about?
Honestly, it's the SoFi research because
Oh,
and I was
okay.
I was so excited to do it, and I'm excited for all the research we do. But it really was answering the question for me of like, why do fintechs win relationships? Like, what's the front door? How do they keep them engaged? And, SoFi we found has like, not only do they have a great, online presence, but the one of the key things that people love about SoFi and one of the reasons they recommend it is not only are they also competitive on rates, but they also offer like the breadth of products. They find SoFi's communication to be, not spammy. It's the communications are relevant. They're hitting them with products that are really relevant to their situation. So their members feel like SoFi understands them and their financial lives, which is really important when we think about financial institutions too, of like what's the mission to help people with their financial lives. And if you can't do that with the experiences that you're offering, then you're going to lose a lot of members to fintechs. They already are.
Sure. Sure. Elizabeth, I want to draw you out on some of the research that you guys are conducting most frequently. What are people coming to you wanting help with the most? Is there a trend that you're seeing?
Yes. So a lot of like the financial technology firms that are commissioning us to do research right now, there's a huge big umbrella theme, which is all about growth because, they use these commission research papers to, help their sales efforts when they're talking to banks and they're trying to explain, why our technology is great and why, you should invest in this technology because it's solving a problem in the market. And it's the theme for, last year, we wrote a quick research recap on it. And for this year, it's all about, you know, things are different. Banking is not the same as it was 20 years ago, and especially not even 5 years ago. And the status quo of how banks are operating is not going to you're either going to not fail as a bank, but you're not going to grow. And that makes you susceptible to potentially being acquired. And if you want to stay relevant in your market, you have to think about what is our growth strategy? Where do we want to be? Are we a bank and we want to get into consumer lending? Why is that important? We're doing, on the flip side, we're doing some on how do credit unions play in the business space because they're traditionally so much more retail. We've done a few recently around how do you leverage fintech partnerships to offer these products and services that you don't currently offer because those are the things that your customers want. So it's all about how do you break out of the standard black and white word community bank mold. You know,
Sure.
if I had $1 for every time, a bank or credit union told us that their differentiator is, our people and our customer service, I'd be a very rich person. Just because if everyone says that, then it's
Sure.
not a differentiator. So it's this year
Yeah.
research really been about how do you leverage fintech partnerships? How should you grow? What are some different ways you should grow? What are the tech stacks behind those to enable that growth? Because otherwise, you're losing to the chimes and the SoFis around the business. You're losing to Brex and Mercury, and you're not just competing against the big banks anymore. You're competing against fintechs, and they have people's attention.
Right. Right. That is a very interesting point. And yeah, it's such a common narrative where people kind of wrap themselves in the flag of we're a community institution. Our logo is on the is on the jersey of the soccer player.
Local team, yeah.
Yeah, yeah, which is great and is a pillar of strength, I think, for these institutions. But there's so much more kind of on the table for them
Yeah,
to take advantage of.
because it feels like a lot of financial institutions, big banks aside, are they're standing on that one pillar of we're a community institution. That's what we do. It's like, okay, but do you fully understand what your community wants
Hmm.
from you? Because, the fact that you can't bank everyone in your community means that, you shouldn't try to, bank everyone. You should really be able to know who you are, who do you serve, what products do you offer, and how you're going to offer it so it creates the most frictionless experience so that you can stay competitive. It's not just about customer service anymore.
Absolutely. I just did an interview with Christian, I may get his last name wrong, Rupee. He just joined Zach Forbes's new organization. It's called Impact Fi Advisors. Anyways, he was a career banker, fintech founder, who had a nice exit. Anyways, he has a unique perspective, and he was talking about how the one thing that a lot of institutions get wrong is Treasury and small business. How do
Mhm.
you see the evolution of small business as a a critical component for the community institutions?
So I'm going to answer this from a perspective just because we just wrote some research on how do banks better offer these the products and services that businesses want. And the topic was called monetizing open banking, because it is a revenue stream for banks to, I mean, as an example, some of our research showed that for for small medium businesses and some commercial, they have ERP systems and they want their banks to integrate to them, but only like what was like 7 to 10% of banks under 10 billion actually
And
offer
when
that.
you say ERP, it's kind of liken it to a Fiserv Premier Core, but in a non-banking space. It's the
Right.
core kind of nucleus. Yeah,
It's the core nucleus of a business. It's helps them run their finances and their accounting, and it's so critical. And without these certain integrations for to help businesses run their financial lives, you have
right.
so many businesses that have so many different financial accounts and that don't speak to each other. So one of the ways that banks can really capture the full business relationship if they're offering these treasury products is think about what do our businesses want, what don't we offer, and how do we get there through open banking, through integrations and like real-time APIs.
And do you think that is the onus on the banks to put pressure on their fintech providers to make that happen?
Yes, because I think as we know that especially for when it comes to cores, they're not always the most innovative bunch. So you do have to put the
Hey, come on.
that's a die. That's a hill I'll die on. That's a hill, Cornerstone. But I mean, I know, they do try to be innovative, but banks, if they want to be able to do something, their cores have to be able to offer it. Or at least be willing to build it. Because, if you get dragged down by the capabilities you currently have in your current tech stack, it's going to keep you from growing.
Yeah, absolutely. Speaking of cores, kind of off topic, I'm sure you're probably aware of this, but Fiserv is consolidating their core lineup. What do you think? Good thing, bad thing?
Um, I hope a good thing.
I think it's going to be good. I feel like,
Yeah.
I used to work for Fiserv. They're amazing in so many ways, but
Hmm.
man, that's a lot of products.
Yeah, so that way it'll hopefully streamline things. I just hope that they can operationalize it correctly internally and make the transitions for all their current clients pretty seamless, or as easy as it can be.
Core implementations, no big deal. Come
No big,
on.
it takes only a couple of weeks, right, to get a new core off the ground. So this is over your project. So yeah, I mean
Yeah.
that I think it's good that they're consolidating. I just hope that they're doing everything they can to help their clients along the way.
Yeah. Yeah, yeah. No, I'm sure, I heard this saying from one of the executives from back when I worked there, and it's something along the lines of, "We're not always going to get it right, but we will make it right," which I assume that they'll do that.
I think so too.
Well, Elizabeth, this has been awesome having you on the show. Really interesting to hear your perspective, especially because so much of what you are digging into is done from an objective, empirical standpoint as somebody who's doing all this research.
Oh, yes, and, one note on that, none of our research are fluff pieces. I mean, there have been so many times they'll come back to us with edits and say this about us," and Ron and I are like, "No, like,
Mm.
this is an objective piece, it's not a sales fluff piece for you." So, we keep it as neutral
Well,
as possible.
that's how you retain your street cred. So I commend you guys on that. So where can people learn about the work that you're doing, Elizabeth, and what's going on with Cornerstone?
Honestly, it's follow us on LinkedIn. I'm not as active on social media as I probably should be, but if you want the best and possible resource, follow Ron Shevlin on LinkedIn for Forbes because he's quite a prolific writer.
He really is. I don't know how the guy does it, but he's getting after it, and he's
Yeah,
doing a good job.
yeah. But or just contact me directly. We're always happy to have conversations.
Okay, awesome. Elizabeth, thanks for coming on.
Yeah, thank you so much, Roland. It was fun.
Hey, did you know that Propagate Fintech is also an end-to-end marketing and PR firm? If you'd like to explore working with us or coming on the podcast, reach out to us at propagatefintech.com and we can explore whatever you're working on.